Hello everyone, I am Ayan Mandal, and today I will discuss about the what is the ethical issue or what are the ethical and what are the unethical issue in recovery practice. So let's start today's discussion. That is ethical issue in recovery practice. So first is what is the meaning of recovery practice? Recovery practice refers to the methods used by banks, NBFCs, financial institutions to collect overdue or unpaid loan amount from borrowers. So, what are the key points in this? Including follow-up calls, reminders, visits, and legal notice. So, objective is to ensure timely repayment of loans, helps in reducing bad loans, maintain financial discipline in systems. Examples: banks pending payment reminders via messages, phone calls, emails, personal visits to recover EMIs. So, why ethics in recovery matters? Ethical recovery ensures respect, fairness, and legal compliance while collecting dues from borrowers. First is protect borrower dignity. It's ensure respectful communication, prevent abuses, threats, and humiliation. Second is ensure fairness and transparency. No, like clear communication about dues, no hidden charges or misleading tactics. Third is build trust, that is build trust like in financial systems. Ethical behavior strengthen public confidence and encourage long-term customer relationships. So and fourth, that is prevents harassments and mental trauma, avoids stress, anxiety, and emotional pressure, promotes mental well-being of borrowers. So like what are the key ethical issues? That is peer pressure, public shaming, and coercive recovery. So move to the So next is peer pressure. What is peer pressure? Peer pressure in recovery involves contacting family members, friends, neighbors, and employers to force borrower to repay loans. This practice is unethical as it violates privacy, causes mental stress, and leads to social embarrassment. So cases examples like in Andhra Pradesh, recovery agent pressured neighbors and community members to shame borrowers into repayment. This caused severe psychological stress and leading to public criticism and strict. And now the regulation by government and RBI are more strict. Next is public shaming. Public shaming refers to publicly expose the borrower's identity or default status to humiliate them and force them to repay. This leads to loss of dignity, mental trauma, and damage to reputation. There are many cases where agents visited borrowers' home repeatedly and announced defaults in public places and intimidated borrowers in front of neighbors, leading to emotional trauma. After such incidents, RBI introduced fair practice codes to strictly regulate the recovery behavior. So move to the next slide. That is coercive recovery. Like coercive recovery refers to the use of force, threats, intimidation, harassment by recovery agents to collect overdue loan payments from borrowers. So what are the historical practice? In earlier days, many recovery agents used aggressive and unethical methods such as physical intimidation, threatening body language, aggressive behavior as well. So threatening visits, repeated visits to home and workplaces, late night calls as well, disturbing borrowers during odd hours, verbal abuses like using insulting and humiliating languages. So, what is the ethical issue in that? Human rights violations such as such practices violates the basic right of dignity, privacy, and safety. Emotional trauma, continuous harassment causes stress, fear, anxiety, and mental health issues. Loss of public trust, hurt recovery methods, reduce public's confidence in banks and financial institutions. So there are many cases like several MFI used to coercive recovery methods, including public pressure, threats, harassments. This leads to several emotional trauma among borrowers, and in some cases, the results are well reported suicide. As a result, the government intervened and RBI introduced strict guidelines to fair recovery practices. So move to the next slide. RBI guideline and ethical recovery practices. So first is no harassment or threats. Recovery agent must not use abusive language, force, or intimidation. Examples: no threatening calls or aggressive visits. Second is respect borrower's privacy. Borrower's details must remain confidential. Example: no contact neighbors, relatives, or employer without consent. Third is no public humiliation. Defaulters must not be shamed publicly. An example: no announcing defaults in public places or repeated visit to create embarrassment. Fourth is fixed calling hours, like 8 to 7 p.m. recovery calls and visit allowed only during specified hours. Examples: no late or early morning calls. Proper grievance redressal systems, like bank must provide a clear complaint mechanism for borrowers. Example: dedicated customers and escalation channels. So, what is the benefits of ethical practices? First, borrowers' rights are protected, ensure dignity, fairness, and legal safety. Second, improve the institutional image, builds trust, goodwill, and customer loyalty. Third is reduce legal risk, prevents lawsuits and penalties and regulatory actions. So, what is the conclusion? Ethical recovery practices ensures a balance between maintaining financial discipline and preserving human dignity, that promote trust, fairness, and long-term sustainability in financial systems. So that's all about ethical recovery practices. Thank you.